Okay, you guys, welcome everyone to our YouTube channel. My name is Karina Fabi, author of Price Action for All, and we're gonna continue with the series of lessons. So you know, this channel is brand new, but I do have a Spanish content channel, and if you get to have the subtitles in English, I'm not sure which of them you can actually have the translation. You have over 1,600 videos here. I've been working on this channel, over 4 years now, and I've been in the market since 2006. So I decided to start doing pretty much the same content that I did for the last 4 or 5 years with Watch My Trading on the channel, but just focusing on English content. I do have some English information on the other Spanish one, but this is just brand new for all of you guys. Okay, so just this lesson number 6, I believe, and we're just going to go through again the main topics that will help you to understand the market without the misunderstanding of charts, indicators, and technical analysis and all you know. The reason is that today the market is way more smart. They're getting really smart. So you had to be smarter than that. You had to be quicker than the market, and you had to one step ahead of the markets. And I know you know that because you don't get to see my channel, you don't get to know me, you don't get to come to price action if you are a newbie, or if you're just starting the market, or if you're just doing trading. I'm sure that you're smart enough, that you've been in the market for a while, nothing's helping you out. You try probably pretty much everything, nothing's kind of working for you. That's the type of audience that this information is for. This is the type of audience that people found me. Really smart people, really smart traders that there's something else. There is something else. Okay, so one more time, you can get the book in Amazon Kindle version. The physical version, you won't have it. I have it only in Spanish in all Latin America and Spain. I don't know if you can see it. It's Acción de Precios. But anyway, it's the same information here in the translation. Okay, let's go to our topic. And I'm going to go back and forward towards the same focus. So you get to gather all the information once we get through all my lessons. Okay. And I want to talk about a little bit about, price action, how you get exactly to the price activity, how you get exactly to supply and demand, how you know what prices are not for speculation, what prices you don't have to get involved, what prices you have to leave them alone because they're going to eat your stop loss, or they're going to eat the market first, and then whatever side wins the speculation, you want to jump in on that side. That's what I'm saying. We have to be one step ahead of everything else that's going on. Okay, everything else. I mean, information, news, impacts in the market that people is actually expecting, how you read discounted information, discounted market, all of that you can do with price action. And the only thing is, you can do swing trading, you can do day trading. Of course, the best thing you can do is day trading, and that's what this material is ready for. And I do scalping. I'd rather go scalping. I don't care if the swing is from that price to whatever price the entire day. I'm going to grab the swing and I'm going to do 10 transactions, maybe 7 transactions, whatever it takes to get all from those levels of the day without anything floating, without stop loss activation, without everything in between that can miss your trading up. Okay, so this is quite an interesting point about price action, because some prices you have to understand and know that they're not speculative. Some prices are just not for speculation. Okay, some prices are just to pass them, wait for the opportunity to set up for you, and you're gonna do fine. All right, so let's see here. Okay, so as I explained in previous lessons, The entire book is about market areas, market pressures, and pivots. I want to talk about a little bit of pivot points because it will help you a little bit at your first steps, but then I want you to get rid of the pivot points on your platform and just trade the way you do it. I use 74, but I also trade futures in other platforms. So it doesn't matter what platform, doesn't matter what instrument you do, price action is honestly the most transparent way to actually know what's going in the market, what is going on. And it will also help you with the psychology. Because many times when I see traders coming to me and they're like, how come you go to short the S&P 500 for the last 2-3 weeks? And I'm like, what do you mean? Because we all buy. I mean, this keeps doing dips. Well, yeah, I'm using you guys so I can short. I know when the market is going to cut your stop loss. So I'm going to use you guys, the buyers, to short even higher, right to my target. And then I wait for you guys. I wait for the buyer. It's on the downside. It's just going down. So Nasdaq, S&P 500, the US 30, whatever index for the last month or so, I was just only shorting. I mean, not even getting confused with the buyers, but I know where the buyer is going to get. And I know where the stop loss they're having. I know where they're placing it, or the area where they're placing it. So I'm waiting for them. And that's what I teach in my lessons. That's what I teach in my live trading session, because this is not only that I give you this information and then just figure that out by yourself. I run my live trading session every day, and that's what I tell them. Look, this is the level where the buyer is going to try to get in the market. Wait for the stop loss, and then we jump in. So there's no really, you catch in the air. Your trade is in the air when the buyer is out, when the buyer is getting eaten by the market. And the same is the opposite. When I see the highs of the year, the highs of 2 years, the highs of 3 years, I know they want to short. I know that the market is into short side most of the time. I'm going to wait for the seller. I'm going to jump in to buy. I know where the buyer is. I know where the stop losses are. I'm going to wait for them, and I'm going to jump in and buy even more. It's quite basics, but when you see the market behaving the opposite, and I see the downtrend and buyers trying, which is part of their strategy, I understand, but I don't want stop losses to get activated. I don't want to be on the wrong side of the market. So until then, I'm just going to go what the market is doing. That's it. All right, so I think we left it in price action, previous lesson. If I'm repetitive with some topics, that's fine. It's because maybe there's something you need to double understand, double check. We're gonna also talk about speculative and non-speculative prices, and what is the side of the market that you'd rather really get in. Psychological levels are very important also in price action. Okay, so the previous lesson we talk about charts and chartism and the indicators and whatever. And like I said, since I'm sure you know that, now you're going to know how to use them to your favor without getting caught up on the wrong situation in markets. So we're going to talk about it also. Okay, regulation is very important for you, of course. Try to have a regulated broker, otherwise it's just going to be a problem, but you know that. Okay, so we talk about this. Okay, this is what I mentioned to you before. If you have price information from the previous market day, which we are gonna know how to use the previous market day information, the pivot points, if you can set up that already in your account, in your platform, that will be nice, because we're going to talk about it in the next few lessons. And that's one step that I wanted to use. It's a good tool for the introduction to price action, is the daily shift pivot points, not any pivot point, it's the daily shift pivot point. If you have troubles finding, just text me on the comments on this video and I'll give you the link, or I'll give you exactly the name of the indicator that will help you, because then you're not going to need it. But at first, if you're new in price action, it's a great tool. It's an amazing tool. Okay, so this is very important for beginners, because some days we're going to be using the price activity of the previous day, okay, the market day before. So we're going to know what is the buy price, what is the sell price, what is the stop loss setup of everyone, what is the side of the market that you want to be in, and that's it. Okay, so the previous day. But many other times, the truth is that many times we trade at monthly, annual, or even many years high or many years low. It happened in the Ukraine and Russia war. It happened in euro dollar. It happens in euro dollar. So we never seen those lows before. And I've been doing this since, like I said, 2006. So we never seen those lows before. Okay, so we have no price information there. But I knew that everyone was going to try to buy every single day. So I knew that wait for the buyer, short. Wait for the buyers, short. Goes from the lows, even short harder. Again, wait for the buyers, short. Wait for the buyers, short. And then in the other side, I have so many traders say, we're buying the euro, it's at the year's low, it's 2 years low, 5 years low. And I was like, guys, it doesn't matter. Don't get consumed by your stop loss, because that's what happened. Just read the market, what it's doing. Okay, if you have a war going on, if you have whatever going on, then probably what you should be doing is shorting the market, right? It's very much common sense. Okay, so regarding to the time frames, you're gonna be using all time frames. You're gonna go for 4 hours, 1 hour, 15 minutes, 5 minutes. Once we learn how to get into the exactly prices that we're gonna go for, 4 hours, all the time frames. Just you want to be doing all of them. At the beginning of the day, 4 hours to gather what the price activity is getting towards. And then we get closer. We get 1 hour time frame to see what levels the market is getting on the opening hours of the market. And then 15 minutes to catch on the confirmation prices, 5 minutes to check that the levels are getting respected, and then we close the trade. And we keep doing the same, but then using 15 minutes and 5 minutes, 15 minutes and 5 minutes. Okay, so time frames are just, especially on scalping, you want to use 15 minutes, 5 minutes. So the equilibrium price directs supply and demand volume within the trading day, and not the opposite. One more time, you're so caught up on the chart, so caught up on technical analysis that you think that because you have those lows, those highs, that support, that resistance, then whatever scenario comes next is what you have to be trading with. And you know what? It doesn't matter, because you're going to be trading inside the resistance, inside the support, and then outside of it as well. But in support and resistance, you also have tons of opportunities. Tons of opportunities. Some people try to avoid support and resistance, and that should not be the case. You're going to be trading on consolidations. You're going to be trading outside consolidations. Okay, well, this is very important too. Price action has no dualities in its interpretation. A price corresponds to a buyer or a seller, and everything's defined in a given market area. There's no such a thing as you wake up one day and you see the S&P 500 in giving you the confirmation to buy, and you want to short, or the opposite, because indicators, they tend to do that. They're late, so late. And that's why you get caught up on stop loss, and your trade is not on the right side very soon. That's it. When you get to price action, you know what is a buy price, you know what is a short price. There's nothing to actually, getting on the wrong side of the market if you truly know how get to understanding what is supply and what is the demand. Okay, so a market above the equilibrium price will generate buy pressure. So increasing the volume of valuation. The market below the equilibrium price implies that the depreciation and selling pressure. Let's give an example. We have euro dollar trading on the sell pressure area. So we talked about it before. Euro dollar below 110 is on sellers pressure area. It's into the sellers. And above 110 is into the buyers. So whatever is below 110, if euro opened in seller price, only you got to do is to sell. If it's open for sellers, you're only going to short, you're only going to sell. If it opens for the buyer, you want to only buy. All you need to do is to actually buy. But in the seller market area, we know the market's not giving the value to the euro. So the buyers is taking the chances of the day, and then they take their profits out of the market, and then they close the trade. That's it. It drops again. Another day, you have a new low. The market is going to take the advantage of the lows. They're jumping in the euro, whatever. They're going to close the trades and then back to the lows again. Once we reach towards the 110 level, euro dollar is trying to shape the buyer market areas. So everything to the buyers is the safe place, and shorts or the sell is the not safe place. It's something that you have to be really considering, like an exception to short when you are in buy market areas, or to buy when you are in sell market areas. Like, for example, euro dollar, the pound dollar. The opposite will be for the dollar. The dollar carries into all buy pressure. Okay. Of course, we're going to talk about information later. We're going to talk about the non-farm payrolls, interest rates, inflation, PMI, all of that, which I love trading news, because I actually do news really well with price action. And you're going to know how to read the news with the price already discounting the result of the information. And some people may say, that's crazy. You cannot know what the reaction is going to be. And I'm like, yes, I do know, because the market reacts 2, 3, 4 days, even 1 week earlier than the information is getting presented. The market is way too smart. Don't get fooled that they're all waiting for the numbers to kind of start making their investments or trading. Okay, that's not the way it goes. Not the way it goes. So in price action, you're going to know exactly what's going on. Also, understanding how the market behaves before those high impact information. Okay. So of course we do day trading. Price action is perfect for day trading, and we need trading volume. So you're going to have trading volume on the first 2 hours when the market opens. You want to be trading, if you're in Europe, on the opening hours of London and European market in general. And then if you are on the Occidental hours, you want to be trading like, let's say at 9 a.m. New York time, 8 a.m. New York time. So the first 2 hours of the opening hours are actually the best to trade with price action, because we need volume to see where is located the buyer and what is the seller located at that specific day, and what is the best approach in that specific day. Up to this point, I'm not showing you any charts. I'm not showing you any magic on the breakouts, those easy things. That's a breakout, you see, then that's the buy you want to be doing. That's the breakout for the short. You see, that's the channel. That's the whatever, Elliott waves, that's the whatever. Oh, but this is the moment where traders that we have been long enough in the market, you know how smart the market is getting and how to be one step ahead. You want to know what the retail market is doing, so you can actually take advantage of that liquidity they are giving you, because that's what they are doing, honestly. Okay. So that's very important. We need volume. I want you to take good opportunities in the market with price action. I want you to go for that $500 a day, $1,000 a day, $2,000 a day, getting the right timing without stress on stop losses, and just reading how to be one step ahead of everything else and everyone else. So if markets begin to close, our volume market activity begins to fall. So when the banks start to getting out of their trades, that's when the volume gets slower and slower and lower. And we don't want to be in the market at that point. So we need volume. So when that happens, your trades are going to be closed. That's it. We want volume. We want to get that good opportunity. So timing, okay, timing is a very important thing for us. I'm mostly focused on currency markets, but again, you can use this for index or everything else. And commodities, gold, silver, anything. I love gold, for example. Gold goes really well with price action. Okay, so trading with the price has a direct relationship with advantages of a low spread. So the lower the spread, the better. Okay, because again, you want to go for that 105.06 price. You don't want to have the 105 price. You want to get exactly the right price that the market is buying, okay, or selling. So scalping is in price action is a technique to trade a day swing or the intraday levels. You can be scalping or you can just be for the entire swing of the day. I love scalping because that's actually my thing. But if you want to do the day swing, the entire swing of the day without scalping out, that's also okay. And price action applies the same way. So, okay, again, the daily pivot, something that we're going to be using later. Okay, equilibrium price, we talk about it. That's a very good point. Make sure, because this is an exercise that I give in my live training sessions every day. Once I close the training session, I said, take notes of the equilibrium price of today. Take notes of the equilibrium price of today. So the exercise of knowing what the equilibrium price is shaping the market will help you in the future how to know when on the equilibrium price there's no speculation. So above it, the equilibrium price is all bunch of buyers, and below it, all sellers. The equilibrium price is a very good exercise, really good exercise. So, okay, well, I talk about everything that's not going to help you whenever to stochastic RSI, MACD, are just some of the tools that help the analysis. Some analysis also use Evo waves, but that's not strategy, okay, guys? Indicators are not strategic for us. It's just analysis, pure analysis. So when you see traders showing you see the moving average of 14 days, Bollinger Bands, touching whatever, just understand they're not traders. So why should we be listening to all that analysis? There's not such a thing as analysis for us. We want to know exactly what to do, because that makes sense, right? And then it makes sense. It makes sense the moving average. It makes sense that the Elliott waves, the Fibonacci, all of that. And like I keep saying, just leave those people alone. Fibonacci just it helped us up to that point. That's it. Elliott, it helped us up to that point. That's it. Now is the moment for real traders to know and identify only price action and price activity. Okay, so price maps will also help you not only to trade as accurately as possible, but also to be prepared for moments of transition from one market area to another. This is also very important, and we're going to talk about it in the next few lessons. Because once the seller market area is done, get ready for the sell market area to prepare for the possible buy market area. And once the buy market area is done, get ready for the sell market area. So those transitions are also very dangerous. And I'll give you exactly the prices that you have to be careful. So let's say a certain day you wake up, you check my book, and you see, okay, so what is the 109, 108 levels for the euro dollar implies in the FX market? What should I do there? Okay, that's a transition. So you know transition, where to be careful. So my book is actually a tool for every single day. I'm going to grab your experience completely and tell you how to experience the price action, how to get ready, because I've done the mistakes. I've done it. So all my learning progress in how I got better and better and better and better is everything there. So I'll save you many, many years of mistakes and wrong tools. All right. So all of this but to change with the SPA training with prices, the loss closing stop loss, we replace by hedging. We're going to talk about hedging also. Hedging is a good tool. Hedging, it will help you, okay? Because things happen and you don't, I don't know, if you don't get ready for a reversal in the market certain day, you need to start hedging, guys. I will help you to hedge, how hedge is being used. All right. A sale area is by default a fall of the price of a base currency from a specific currency. Commodity and index can also start their year on a sell zone, sale area. And that happens with gold, for example. I don't know if you see gold, how gold is trading. It's at this point is below 900 and it keeps giving dips, and we've been shorting gold. So you say, but it's gold, you know, it's the S&P 500, is a DAX, whatever. So what? They can also have the downtrend. They can also have the sell pressure situation. They can also have the crisis. So even if it is gold and you see the year low, 2 years low, 3 years low, monthly low, whatever low it is, keep shorting. You know, the short is the opportunity not to buy. I'm going to switch the strategy, but eventually, not now. I'm going to switch the strategy once I see gold at least at this point we have in the 1810 gold. And I'm going to switch it probably around the 1850. I'm not sure. I have to see if the day is convincing enough. Because to me, gold below 1900, it is no way it's going to go up. No way it's going to go up. I'm going to catch gold on the buyer's prices eventually, but when I see it safe enough. And again, I keep saving traders with this. One day they wake up, hey, the gold is trading at I don't know, 1880, 1870, 1850. I'm like, so what? Wait for the buyer, and then you short. Wait for the buyer, and then you short them because you know when the stop loss is going to be. But if it is too low, don't get caught up on that. Wait for the buyer. If there's no buyer, you're gonna catch them. You're gonna catch the sale also in the transition to even a new low. So again, you have to be all the time on the side and what the market is actually doing. If you see the gold going down, the silver going down, just don't try to make anything else. Respect the markets, okay? The price action explains the consolidation or market transitions or a market in equilibrium that is only temporary. But I've seen this many times also. When the market is into transition, you see consolidation days and days and days, and the market is just there and there and there and there, like jumping from, I don't know, maybe like 15, 20 pips or 30 pips or 15 pips or whatever it takes. It's just getting stuck in there. I'm like, okay, well, get ready because it's going to get out of that level anytime soon. And we had to be ready to jump in on the right side. But in the between, don't get scared. I mean, that's the fabulous situation. That's actually really good. Okay, cryptocurrency, you might apply a price action, but honestly, it's lacking transparency, cryptocurrency to me. So I kind of say that in the future maybe reliable price action for cryptocurrency, but as long as it's in hands of very few people and the manipulation of the currency is actually a very important issue, then I wouldn't take it as something that you can set up very easy on price action. When there's no manipulation in between, then price action goes perfect for cryptocurrency. But when you have those moments where that came from, and then you have Binance stepping in or whatever, just you know what's going on. So be careful with that. Okay, so here we start getting more into market areas, market range, and market intervals, and I'm going to leave it here for the next lesson. So these three things, you're going to start actually getting into practice with me from this point on. Okay, so at this point, you know the basics: supply, demand, what is actually directing the market, the trading volume, that we just only talk about price activity. And from this point on, we're just going to understand market areas, market range, and market intervals. So this is already into practice. Okay, so I'm just going to leave it here, because first we start with market areas, which I talk a little bit at this point. And it's quite easy. I mean, market areas is when you have the euro, for example, below certain price, and it's the seller. And above certain level is the buyer. The same thing for every other instrument, the same thing for commodities, okay? And then the range is the 100 pips, and then we have 50 pips of range, and then the intervals, 10 pips by 10 pips. And that's when we get into setup strategies, okay? So we're gonna talk about the euro dollar, how we set up the market area, how we get to know that the buyer is there and the seller is there. Just a quick information about the news, okay? News, I love it. I love to trade news because, again, discounted information, that's all that matters for us. Okay, guys, I'll leave it here and I'll see you in the next lesson, and just get ready to understand the market areas. We're going to talk about whatever market area we can with as many examples, but already just going for the market, the platform. So get your charts ready, because now is when actually we start doing all the market activity. Okay, so we're going to start looking at here, my account, and we're gonna see the index as well. For example, this is the S&P, the Nasdaq, and I got that sale. That was the MVP of last Friday. We got that short. I got that short, and then I closed everything there. And then the buyers start jumping in. And then here where the buy was starting to get on hold with their trades, because I saw the psychological prices around. So I say, okay, well, about 14, this is not a future, this is a spot market, but you can apply in the futures as well. I use futures in another platform. This is the broker that I use, is One Financial Markets. It's a UK based, and it's one of the brokers that you have them with the right regulation and everything. So I've been using it for the last 9 years. So then after that, I saw the index just jumping on buyers, and all the buyers were just getting in control of the market. So then I saw the seller losing. So okay, I'm gonna wait on the seller, jump in. I'm gonna wait on the seller, jump in. I'm gonna wait on the seller, jump in. But then I just got tired and then just close it. Because again, you can be doing this every 5 to 10 minutes. Just gather all the information you can. So for the pound dollar, also we got the short here. Also the euro, that was the MVP. Not all of it. I think we closed it around the 20.50 here, psychological price. I wait on the buyer. There was no buyer. Jump down to the next two targets. And then I wait on the buyer above the 21.50, and then just all buyers towards my targets. And then again, but you won't listen from me breakouts or channels or Fibonacci retracement or moving averages or whatever. You see lines. You're gonna be understanding the lines of the prices. All right, so I'm excited. Next lessons, we are right into practice, and that's when it gets actually fun, and it's gonna make so much sense for you. I'm so excited for you, because again, everything out there will not take you consistently every single day, every single month. I won't take you the consistency that you're looking for, because I've been in your place. I've been there, and I know how difficult it is to make the money and lose it again, to make the money and lose it again, because you were having the wrong tools, you were having the wrong information, but not anymore. And I'm glad you are here with me. I'll leave it here, and I'll see you on the next few lessons. Bye-bye.